Hello, in this video, we're focusing on the practical concepts that you can actually apply in the real business world. Hope you enjoy it. Let's get on with it. Today, we'll explore how Nokia is planning its comeback, looking closely at the strategies they're using to regain their place in the market. We'll cover their key areas of focus and how they are adapting to changes in technology and consumer preferences. Let's dive into what's shaping Nokia's next steps. Nokia's story is often seen as a rise and fall, moving from global mobile phone leadership in the early 2000s to a company disrupted by the smartphone revolution. However, what many don't realize is that Nokia never disappeared. Instead, it reinvented itself over the last decade, especially since 2020, by shifting focus from consumer electronics to business technology infrastructure. After exiting the smartphone market, Nokia faced tough competition from Ericsson, Huawei, and new Open RAN companies, along with fluctuations in telecom operator spending. Under the leadership of CEO Pekka Lundmark and then Justin Hotard, the company stabilized its finances and rebuilt its technology strengths. Nokia now positions itself to benefit from growth driven by AI, cloud computing, and data centers, focusing on becoming a trusted Western supplier of critical digital infrastructure. This includes mobile networks, fiber and optical backbones, cloud networking, enterprise private wireless, and high-value intellectual property licensing. This presentation will explore Nokia's comeback strategy by looking at its business model, competitive advantages, financial health, and how it serves its customers. Nokia's business model today focuses entirely on business-to-business markets, providing essential connectivity technologies to telecom operators, enterprises, hyperscalers, and governments. To better meet growing AI-driven demands, the company reorganized into two main segments by 2026: network infrastructure and mobile infrastructure. Network infrastructure is the main growth driver, covering optical networks, IP routing and switching, and fixed broadband access, all benefiting from the steady expansion of AI data centers and cloud computing. Mobile infrastructure combines radio access networks like 5G and future 6G, core networks and technology platforms, shifting toward AI native, software-driven solutions such as AI RAN and cloud-based deployments instead of just traditional hardware upgrades. Additionally, Nokia earns stable, high-margin income through Nokia Technologies by licensing its extensive patent portfolio related to 4G, 5G, and upcoming technologies to smartphone makers and other device manufacturers. This helps provide cash flow to support research and development while balancing the cyclic nature of network investment. Nokia's strength lies in its broad and integrated infrastructure portfolio, which spans mobile, fixed, IP, optical, and cloud networking. This allows the company to offer comprehensive solutions rather than just individual products, making it easier for telecom operators and enterprises to manage and upgrade their networks. It also leads the way in private wireless and enterprise networks, particularly with private 4G and 5G deployments in industries like manufacturing, ports, utilities, and the public sector. In 2024, Nokia has been adding new enterprise customers faster than its major competitors, showing strong momentum in a key growth area. The company's deep commitment to research and development keeps it influential in shaping global standards for upcoming technologies like 5G Advanced and 6G, which is crucial for staying relevant as networks evolve with AI integration. Finally, geopolitical factors have increased demand for trusted, secure suppliers outside of China, and Nokia benefits from being recognized as a reliable Western vendor, especially in Europe and North America. This mix of technology leadership, innovation, and trust positions Nokia well for the future. Nokia's reliance on telecom operators' capital expenditure means it is exposed to the ups and downs of their spending cycles, which tend to be influenced by factors like interest rates and overall economic conditions. This cyclical nature creates some uncertainty for Nokia's revenues. Additionally, Nokia faces intense competition in its mobile RAN business, with pricing pressures and challenges to market share, especially against Huawei worldwide and Ericsson and Samsung in certain Western markets. The wide range of products and services Nokia manages, from hardware to software and licensing, adds to operational complexity, which can slow down decision-making compared to competitors with more focused offerings. Finally, while Nokia is respected in traditional telecom circles, it still needs to strengthen its reputation as a leader in newer areas like AI and cloud infrastructure, a gap that company management is actively working to close. Nokia's extensive global network installed base gives it a strong foundation for long-term customer relationships, especially in environments where reliability is critical. This creates significant switching costs for customers, making it harder for competitors to take market share. On top of that, Nokia is advancing its network strategy by integrating AI capabilities directly into its infrastructure, working with partners like NVIDIA to accelerate AI workloads in conjunction with connectivity. This approach sets Nokia apart from vendors who focus only on traditional telecom hardware. Additionally, the company benefits from a high-margin patent licensing business that provides steady revenue even when the industry faces downturns. Finally, Nokia is expanding in areas like private wireless networks, enterprise solutions, and defense communications, which helps reduce dependence on traditional telecom operator spending and adds important diversification to its business. The financial results last year showed that while Nokia faced challenges like lower spending from operators and declining revenue, the company managed to stay cash flow positive and maintain its profit margins through careful cost control. The fourth quarter saw a notable improvement in profitability, mainly due to growth in the network infrastructure business and solid income from patent licensing. By the end of 2024, Nokia held a strong net cash position of approximately 4.9 billion euros, which positions it well to invest in key future technologies like AI, cloud, and 6G. Looking ahead, management has set clear medium-term targets to increase operating profit to between 2.7 and 3.2 billion euros by 2028, focusing more on AI-driven infrastructure demand rather than traditional volume growth seen in handsets. This reflects a company in transition, adapting its strategy and financial approach for long-term stability and growth. Nokia's approach to customer experience is centered mainly on enterprise customers and telecom operators rather than individual consumers. For operators, the focus is on delivering reliable networks, strong lifecycle support, and using automation to help lower operating costs while improving service quality. Their software platforms support things like predictive maintenance and AI-driven network optimization, which are crucial for keeping networks running smoothly. On the enterprise side, Nokia offers complete private wireless solutions that are often developed in partnership with customers in industries like manufacturing, logistics, energy, and public safety. This collaborative development strengthens deep, long-term relationships and sets Nokia apart from competitors who only provide hardware. Unlike consumer brands, Nokia measures its success less by brand popularity and more by practical factors such as network uptime, security, and the total cost of ownership, which reflects where they choose to invest their resources. Nokia's strategy today is about transforming itself rather than trying to go back to its old consumer-focused roots. The company has shifted away from low-margin consumer hardware and is concentrating on areas like network infrastructure, AI-powered connectivity, enterprise solutions, and intellectual property. This approach positions Nokia to play a vital role in the evolving global technology landscape. While there are risks, such as strong competition and the cyclical nature of telecom spending, Nokia is better prepared now. It has a simpler operating model, a stronger financial position, and a clearer focus than it did 10 years ago. Rather than being a flashy consumer brand, Nokia is increasingly becoming an essential part of the AI-driven digital world, acting as a reliable backbone for new technologies. If you found this video useful, there's plenty of more business and finance videos on the channel that you'll enjoy watching and get great practical value from. In the meantime, thanks for watching.